The stock market is heating up, and if you've been watching closely, you know it's not just about big tech anymore. From AI-fueled energy demand to inflation pressures, Fed policy, and a surprising rally in nuclear power stocks, we're seeing massive shifts that savvy investors can't afford to ignore. In today's video, we're breaking down 3 powerhouse stocks that are riding these trends, including one nuclear energy company that's making bold moves to power America's AI boom, Vistra Corp. We'll unpack the key fundamentals, earnings outlooks, and valuation signals that make these stocks stand out in a volatile market. Whether you're a long-term investor or short-term trader, this video will help you get positioned for what's coming next. But before we dive in, don't forget to hit that like button, subscribe if you're new here, and tap the notification bell so you never miss an update on the market moves that matter. All right, let's get into it. Here's stock number 1 on our list. First up, Oklo Inc. ticker symbol, Oklo. A company that's been making waves in the nuclear sector. Backed by OpenAI's Sam Altman, Oklo is developing advanced fission power plants designed to provide clean, reliable, and affordable energy at scale. Over the past year, Oklo's stock has experienced a meteoric rise, surging approximately 440%, with a 172% increase year-to-date. This impressive performance has been fueled by a combination of strategic partnerships, favorable government policies, and growing investor optimism about the role of nuclear energy in powering AI infrastructure. Analysts have taken note, with B. Riley recently raising its price target to $58, citing Oklo's potential in the AI and nuclear sectors. Oklo's Aurora powerhouse, a small modular reactor, SMR, capable of delivering up to 75 megawatts, is designed to provide reliable, carbon-free energy tailored for high-density energy users, such as AI-driven data centers. The company has secured partnerships with major data center providers, expanding its customer pipeline to approximately 2,100 megawatts. Notably, Oklo signed a non-binding agreement with Switch, a data center operator, to supply up to 12 gigawatts of electricity through 2044. Additionally, collaborations with entities like Korea Hydro and Nuclear Power and Lightbridge Corporation aim to enhance Oklo's nuclear technology capabilities and fuel recycling processes. Despite its innovative strides, Oklo remains a pre-revenue company, reporting a net loss exceeding $73.62 million in FY 2024. However, the company maintains a healthy cash position, bolstered by a $400 million follow-on equity offering announced on June 2, 2025. Analysts have expressed cautious optimism, with Wedbush raising its price target to $45, highlighting Oklo's strategic positioning in the AI-driven energy market. While Oklo's prospects are promising, potential investors should be aware of the inherent risks. Regulatory hurdles. The deployment of SMRs involves navigating complex regulatory landscapes, which could lead to project delays. As a pre-revenue company, Oklo's financial sustainability depends on the successful execution of its projects and continued investor support. The nuclear energy sector is becoming increasingly competitive, with established players and new entrants vying for market share. Oklo Inc. represents a compelling, albeit high-risk investment opportunity at the intersection of nuclear energy and AI infrastructure. Its innovative technology, strategic partnerships, and alignment with the growing demand for clean, reliable energy position it as a potential leader in the sector. However, investors should conduct thorough due diligence and consider the associated risks before investing. Moving on to the next nuclear stock on our list, Vistra Corp ticker VST, the largest competitive power generator in the U.S., is strategically positioned to capitalize on the surging electricity demand driven by the AI boom. As AI data centers proliferate, requiring vast amounts of reliable and carbon-free power, Vistra's diversified energy portfolio, including natural gas, solar, battery storage, and down to nuclear assets, places it at the forefront of this transformation. As of June 6, 2025, Vistra's stock closed at $173.60, reflecting a strong upward trajectory. The company reported a Q1 2025 adjusted EBITDA between $5.5 billion and $6.1 billion, reaffirming its robust financial health. Analysts forecast a rebound in earnings for fiscal 2026, with EPS expected to rise to $7.73, a 36.1% increase from the previous year. In a significant move to bolster its capacity, Vistra announced the acquisition of 7 natural gas-fired power plants for $1.9 billion from Lotus Infrastructure Partners. This acquisition adds 2.6 GW of capacity, enhancing Vistra's ability to meet the escalating power demands of AI infrastructures. Vistra's current price-to-earnings (PE) ratio stands at 22.28, below the industry average of 29.13, indicating potential undervaluation relative to its peers. This, combined with its growth prospects, makes it an attractive option for investors seeking exposure to the intersection of energy and technology. Next on the list is NuScale Power, ticker SMR. The company has been making headlines with its innovative small modular reactor (SMR) technology. Recently, the U.S. Nuclear Regulatory Commission approved NuScale's updated design for a 77-megawatt SMR, an upgrade from its previously approved 50-megawatt model. This advancement is expected to improve the economics and performance of their reactors, positioning NuScale as a leader in the SMR space. The company's stock has responded positively, with a significant rally following the approval and recent executive orders aimed at accelerating nuclear reactor construction in the U.S. These orders are part of a broader initiative to revitalize the nuclear energy sector, providing a favorable regulatory environment for companies like NuScale. Analysts have taken note, with CLSA raising its price target on NuScale Power from $3,100 to $4,100, reflecting optimism about the company's future financial performance. The last stock on our list is Vertiv Holdings, ticker symbol VRT. Vertiv Holdings is a leading provider of critical infrastructure and services for data centers, communication networks, and industrial applications. As AI continues to drive exponential growth in data creation and processing, Vertiv's role in providing power management systems, thermal solutions, and monitoring tools becomes increasingly vital. Vertiv reported a 24% revenue increase in Q1 2025, surpassing the market's average growth rate. Analysts project the company's earnings to grow from $3.59 per share to $4.46 per share in the next year, marking a 24.23% increase. With AI clusters pushing rack power density beyond 1 MW, Vertiv is developing solutions to support extreme workloads with liquid cooling, precision power distribution, and new approaches to energy management. This positions Vertiv as a critical enabler in the evolving AI infrastructure landscape. Vertiv's forward PE ratio of 31.27 reflects investor confidence in its growth trajectory and strategic importance in the AI ecosystem. As data center energy consumption is projected to grow 23.5% year over year, Vertiv's solutions are poised to meet these increasing demands. Both Vistra Corp and Vertiv Holdings are strategically positioned to benefit from the AI-driven surge in electricity demand and data center infrastructure expansion. Vistra's diversified energy portfolio and recent acquisitions enhance its capacity to supply reliable power, while Vertiv's innovative solutions address the evolving needs of high-density AI data centers. Investors seeking exposure to the intersection of energy and technology may find these companies compelling additions to their portfolios. So, what do you think? Are you staying in utilities or sitting on cash? Drop a comment below. We'd love to hear your take. Don't forget to like, subscribe, and hit the bell icon so you never miss insights that can move your money. Thanks for watching, and until next time, invest wisely.